It never ceases to amaze me the things people do on their bank statements which completely destroys their mortgage application. Now, as a mortgage advisor, I've seen thousands of applications over the years, so I've put together this quick video which will tell you the top 5 issues for you to steer clear of on your bank statements so you can avoid your application from being declined. But before I get into it, hello, this is the Watch and Earn YouTube channel and my name's Errol. I give everyday tricks and tips to help you save and earn money. Most but not all mortgage companies require bank statements. For ones that do, however, the most they would usually require are at least the last 3 months. So it's really important that in the 3 months leading up to your application, you make sure that you follow these tips. Number 1, don't enter your overdraft. Look, it goes without saying, a mortgage company wants to see a customer who can afford their mortgage. We all would have seen this warning on a mortgage advertisement. So if you're living in your overdraft, meaning every month you become overdrawn at some point, you are telling the mortgage company that you're currently living beyond your means, or that you can't properly manage your finances. Even worse, if the mortgage you're applying for costs more per month than your current rent or mortgage, or you're not paying even rent right now, the mortgage company will likely take the view that the mortgage you're applying for isn't going to be affordable for you and straight decline your application. So make sure that at least 3 months before you start your application, you have not entered your overdraft. Number 2, stop betting and gambling. Mortgage companies generally don't like seeing betting or gambling on bank statements, but will tolerate it to low amounts. A lot of people do the odd lottery tickets or football bets, which is completely fine. However, red flags for lenders would be seeing gambling multiple days a week, totaling more than 5% of your take-home pay, or if there are any signs of gambling causing financial stress. Now, what I mean by financial stress is that it can involve one or more of the following: going into your overdraft, returned direct debits appearing on your bank statements, missed or late payments appearing on your credit file. If any of these financial stresses appear alongside any gambling, then the lender is very likely to straight decline your application. If you're lucky and the application isn't straight declined, the mortgage company may add together all the total outgoing gambling transactions and factor them into the affordability. If there are hundreds of pounds going out each month, this could result in a max loan. Be aware, even if you're winning money back when gambling, the mortgage company is only going to look at the money going out and ignore any winnings coming in. By the way, if you find any of the tips in this video interesting, tap the like button and subscribe if you'd like to see more. Thank you. Number 3, avoid making ad hoc payments and standing orders. Monthly payments going out are always going to be questioned if it's not clear exactly what they are. This, at the very least, will result in your application being delayed, as the lender will want to seek further clarification from you on what they are. The most common ones I see are usually harmless, like people giving money for a birthday, paying your half of a meal out, or making a one-off purchase to someone or some company. The best thing to do, however, leading up to a mortgage application is to avoid any of these payments on your bank statements. This will avoid the lender having to ask about them during your application and will help speed up the whole process. The worst kinds of payments or standing orders I see is when an applicant is regularly transferring money to someone to repay a debt to them. So for example, you might have a parent who buys you a car or lends you some money and you're paying back as months go on. Well, as far as the mortgage company is concerned, the person you're paying is now a creditor and that payment you're making is now a credit commitment. So this payment is now treated almost like if the payment that you were making was to a car finance company or to a bank. And as a result, this will be factored into the affordability calculations and will very likely reduce the maximum you could borrow. Number 4, paying via installments. A lot of online retailers offer short-term payment options when making purchases. This is where they allow you to split the payment into multiple parts, usually over 3 and 4 months. Klarna is one such company. PayPal will give this option as well. Although such payments are clearly short-term, some mortgage companies will treat these as a monthly debt and will not ignore them on their affordability assessment, even if they will be paid off before the mortgage starts. So again, avoid having any of these transactions on your bank statements leading up to your application. And number 5, avoid regular cash withdrawals. It is the policy of some mortgage companies to treat cash withdrawals as a commitment to be factored into their affordability assessment. So again, to avoid any max loan situations, simply avoid withdrawing cash leading up to your application. Now, bonus tip. At the start of the video, I mentioned that most, but not all mortgage companies will require bank statements. So if you're looking to start an application within the next 3 months, and unfortunately one or more of the issues I've said in today's videos are on your statements, then speak to a mortgage broker. They will be able to check with each lender to see what information they will require when assessing your particular application. If there is a lender who's willing to assess your application without bank statements, then have your application submitted to them, and avoid being declined by any lender who would be unhappy with the information they see on your current 3-month statements. And also avoid having to wait a further 3 months for issues to disappear if a lender isn't happy with what they currently see. Now, thank you for watching. In the next part, I'll be sharing the top 5 issues to look out for on your payslips which can affect the maximum amount a mortgage company will be prepared to lend. And don't forget to tap that like button and subscribe so you can be kept up to date on the latest releases. And leave a comment if there are any topics you'd like me to cover in the future. Bye for now.